Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on March 10th. My name is Ian Saunders, and we're joined us here as well by David Clark. David, it's good to see you here on this Thursday morning at the time that we're recording here.
Yeah, a little bit of a earlier time than we normally record the podcast, but still not for a lack of things to talk about at all this week. Although a bit of quiet market action in some manner since the start of February, but we're still seeing enough to talk about in terms of what we're seeing on charts, what we're seeing in terms of sector movement. So it's what we're going to spend most of our time on today.
Yeah. I mean, there has been not as much to talk about from any kind of broader like indicator changes. I mean, things have been pretty consistent from a relative strength perspective. We have seen some interesting movement in some individual sectors, which we'll get into more in just a sec. But in looking at the broader indices, I mean, taking a look at the default chart of the S&P 500 index, that 20-point chart, that's kind of the main one that we're looking at coming in there. I mean, stories just kind of been a little bit of consolidation over the course of the past couple of weeks, right? I mean, you got a big continuous rally up, 5 consecutive buy signals. They kind of lead off the year into February, peaked out around that 4180 level, and now we've gotten 2 consecutive sell signals with a near-term bottom last week down at that 3940 point. Reversal up, reversal back down, and we are now smack dab at the midpoint on the 10-week trailing trading band. So right in the middle of normalized positioning at a negative 0.5 oversold. So, I mean, it's pretty close to zero there.
Yeah, not often that you actually see the potential of a 0% overbought, oversold, but this is, I can admit, in the time I've been here, close to a decade I've been here, it's not that often. And this is one of the closest I've ever seen to an actual 0% reading for an overbought, oversold. So interesting for that. And as you noted, I mean, seeing consecutive sell signals, series of lower tops, it's just consolidation at the moment. It's not like we've had any big thrust to the downside because we still have support there at 3,900 and 3,880 intact, which we thought we were going to test. We did sort of test earlier this month, but we saw a reversal back up. So just a lot of range bound action really for the past month and a half. That's not yielded much in terms of the broad market, but that doesn't mean there hasn't been something that you can't look for. And for us, it's been looking at sectors, and probably the sector for us that we've talked about, at least in the office, I know the most, maybe here and there through the reports and podcasts, has been industrials. I mean, industrials has sort of been that leading sector that's held up and participated here recently, much more than some of those other leading sectors that we saw wrapping up 2022. Like energy, we've seen a little bit of rebound, but really industrials has kind of carried the baton here recently. And looking at the asset class group scores page, we see industrials up there in that 4-score threshold, in that blue sky zone, if you will, along with MLPs and even transportation. There's actually kind of an interesting overlap in a way between industrials and transportation. So seeing them both scoring there. And for industrials, we saw it peak up above kind of late at the end of February, that 4-score threshold, but has now continued to remain above it fairly decent. Whereas transportation, this is the first time since the summer of 21 that we've seen it back above that 4-score threshold. So seeing some of that overlap, seeing that improvement, really looking at a lot of industrials names as places for potential strength. But as we've seen here too, there's also some opportunity even under the hood within subsectors. So you can look at broad, you can look at sub, depends on which way you want to go.
Right. And I think that industrial play, it's a pretty interesting aspect, right? I mean, a lot of kind of questions about economic uncertainty, right? Kind of leading to rate uncertainty. And I mean, the industrial sector is one of the sectors that's kind of generally more correlated to a strong economy, right? And I mean, you got a lot of names in that. I mean, the Dow, the transport's the same way, right? The Dow transport's kind of classic indicator there. But it's kind of interesting to see that, I mean, the price movement's just telling us that industrials group just continues to tick higher, right? And like you said, I think that important point to touch on, I mean, this isn't the kind of group that has, at least historically, risen to that 4.0 threshold and then just turned right back around and moved lower. We definitely have seen that happen, and that could certainly happen. Just because it hit and crossed 4 doesn't mean it's going to stay up there for a while. But I mean, we track 134 different groups on the asset class group scores page. Industrials is currently ranked second out of those 134. So there's not many areas that are kind of surpassing the near-term strength of the industrial space. And I mean, David, when we look into some of the constituents of that group that are kind of leading to these higher score thresholds, I mean, the the biggest one, the one that kind of first one that most people are going to look towards,
Right.
that State Street fund, that Industrial Select Spider Fund, their ticker XLI, strong 4.55 fund score. A lot of consistent movement on that default chart. I mean, we've gotten 3 consecutive buy signals. We crossed back up and broke another triple top formation earlier this week, leading up to, or at least matching, right, a 52-week high that we saw in March of last year. So hopefully this buy signal doesn't turn out like the buy signal we saw in March of 2022 and turn right back around and moving lower from here. Definitely a different kind of market environment.
Well, and another sort of added piece to that, or silver lining, if you will, for folks looking at the fact that, okay, it's rallying up to this resistance, those 2022 levels that we saw it sort of begin to move lower at, is this time around, the difference between this time around and 12 months ago, you have the addition of a reversal on the market RS chart occurring this week. So you saw XLI move back into a column of X's on its market RS chart, showing a near-term trend of outperformance. And it actually had been in a column of those since September of 2021. So really an extended period of time, really the last time you saw, not too long after the last time you saw the group scoring above 4 consistently in the summer of 21, is then you saw this reverse down on its market RS chart in terms of XLI reversing down on its market RS chart there in September of 21. Now back in a column of X's. So there's a big difference, in terms of looking at 12 months ago versus now. We now have XLI showing that it has a near-term trend of outperformance, and versus the market, and hard to argue with being up over 4% this year, especially broadly speaking.
You look at the broader S&P. The broader S&P is up right about 4% too. So seeing kind of XLI right in line. I think through market movement on Wednesday, the S&P 500 on a price return basis up 3.97%. And then you got XLI up 4.26%. So it's we're right about in line. So it's good to see that consistency and that kind of confirmation, like you were talking. We're always looking for confirmation, right? You can't rely on just one signal, just one change. So seeing 3 consecutive buy signals, another triple top formation, which is stronger, kind of it's a more significant resistance point that the security is able to break through. And then you pair that with the market RS reversal. It's just kind of one thing falling in line after another.
Right. Well, and it's sort of interesting. You mentioned some of the overlap in getting that confirmation. And I mentioned earlier talking about subsectors too within industrials, and there's some overlap between transportation and the industrials group. Really, you could probably qualify transportation as a subsector of industrials truly, but one of those areas or other subsectors with industrials that you get a lot of overlap from is aerospace and defense, which has truly been the sort of baton carrying or torch carrying, if you will, leader within the sector for really quite some time. It held up better when market environment was moving lower. Coming off the bottom, we saw it rally pretty significantly as well. And one of the ETFs we look at in terms of aerospace and defense is going to be that Invesco Aerospace and Defense ETF PPA. Has a current fund score of 5.66, well above that of industrials and transportation. Recently back in February, moved to a new high as it rallied up to 82 following a completion of a triple top buy signal there at 81. So and actually still even trading near highs is still actionable at current levels. So it's something that if you were looking to get more granular within industrials to a subsector that you really see kind of some of that overlap between it and industrials and transportation, you can for sure look to aerospace and defense and then look at PPA. But there's also a few stocks you could look to as well. So I know we went back and forth on a couple we were talking about that might be our favorites, but I'll let you go first.
Well, no, I think there's a lot of names underneath the hood that you kind of look toward that have shown a lot of near-term strength. One, just looking at one kind of crossover between a strong 5-for-5er within that aerospace defense fund, right? Transdim Group. I'm going to mispronounce that name. Ticker is TDG. That's the more important thing that you need to know.
The one part that matters.
Right. The one part that matters there. Yeah. TDG. 3 consecutive buy signals coming up at another double top formation this week. Pretty pricey stock up in the 770s trading or 760s trading range now. It's up 21% on a year-to-date basis. So not bad for a little over 2 months. A little bit overbought at these levels here, but we've seen that a lot of these names just really just rocketing higher throughout the course of this year. You like that pun there, rocketing higher for the aerospace and defense, right? But yeah, there are a couple others too. Some of the airlines I know, David, that we were looking at, right?
Well, and there's a few airlines out there that look half decent. Looking at United is among them. Looking at it as a 4 for 5, it's rallied up to above prior resistance. Another smaller airline that maybe doesn't get as much attention is Copa Holdings, CPA. It returned to a buy signal this month after recently falling to test prior low or test recent support. We saw it rally back up, but somewhat of a commonality between a lot of these airline companies under the hood, if you will, is going to be Boeing. Boeing is going to be a name that a lot of people are familiar with. It's within that aerospace and defense. You get sort of an overlap with it being sort of a defense name, but also sort of being semi-retail because they sell to all the airlines. But it's a company that let's say they have their hands in a lot of pots. So there's some diversification there. But
and it moves around a lot. I mean, that's definitely a name that I know we got a lot of individuals that call in and they want a lot of frequent updates on Boeing because it has a lot of frequent changes, right?
For sure. And the most recent change is it actually ended a strong series of buy signals here with a triple bottom. But generally speaking, when we look at the first sell signal on a strong uptrend, it's often false. So that's not too alarming for us, especially now. We've seen Boeing move back into a column of X's, rally up to 216, still sits there on its chart right now. Has pulled back in price a little bit, so is right near the middle of that trading band. Technically is actually on the oversold side after yesterday's action, so interesting to see there, because it feels like for most of the year it's been trying to catch up to Boeing because it's been overbought for much of the year. So now seeing a little bit on the oversold side, it's been a darling within that aerospace airline sector, so that might be the one I would tell folks to, well, I guess continue to keep an eye on as well. Yeah. But other aerospace and defense names, did you have like Lockheed Martin and Raytheon showing 3 for 5ers and here recently and still maintaining pretty sound technical pictures. So it is not even a subsector for lack of options either.
Right. And it is important to keep, I mean, you can't just throw a dart at a wall with all the names, right? I mean, Northrop Grumman was a name that we were looking at a lot throughout last year. I remember it was on some of the report content, showed a lot of strength throughout most of last year, just kind of steady movement higher. That strength really broke down to start this year, kind of a divergent from the pack. I mean, it's a 1 for 5 from an attribute perspective. So much more technically weak than Boeing, or at a 3 for 5 attribute rating, or like United, like you said, at a 5 for 5 attribute rating. So definitely want to make sure to kind of, if you're looking at the individual names, keep track of some of those attributes, keep track of some of the recent developments, because it's unfortunately you can't just pick everything there.
No, not at all. But I think that might be a theme of every podcast. Can't just go pick everything. But
yeah, the theme of 2023. I think we've got it there. But yeah, so David, I think that kind of wraps up most of what we were looking to touch on here. I mean, we'll keep this week's podcast a relatively shorter note, given the lack of kind of broader changes. But nonetheless, thanks for joining in, and thanks for everyone else for tuning in this week. And we look forward to talking to you again next week.